Good evening and welcome to our July London South East and Focus IR webinar. For those of you who don't know me, I am Donald Leggett, Head of IR Media, and I'm your host for this evening. We are delighted to welcome 4 speakers tonight, kicking off our evening with Aim-listed Harland Wolff, the shipbuilding and renewable energy focused business who held their AGM in London this morning. Our second company is Bradda Head Lithium, with exposure to sedimentary, hard rock and brine lithium in the United States. Bradda Head are listed on several exchanges including AIM, Canada's TSXV and the OTCQB in the US. Next up and joining us live from Australia is ASX-listed Barton Gold, an ambitious Australian gold exploration company with a pipeline of advanced exploration projects, brownfield mines and the only regional gold mill in South Australia. Our final company of the evening is Kavango Resources, the London-listed Southern Africa-focused metals exploration company with projects in the Kalahari Copper Zone and now gold in Zimbabwe. Each presenter has 30 minutes or so to speak, with 20 minutes to make their investment case before we take your questions and put them to the speakers. And in case you're wondering, Focus IR is the newly launched digital investor relations division of London South East. We work independently and alongside existing advisors to provide investors with all the key information they need. If anyone watching wants to know more, please do get in touch with Kat at kat.perez@focusir.com. As ever, many thanks for joining us tonight, and it's time to hear from our CEOs. Harland Wolff Group is a UK quoted company focused on strategic infrastructure projects and the Island McGee Gas Caverns project. The recently signed FSS subcontract for the supply of 3 fleet solid support vessels for the UK Navy boosts contracted revenues to 900 million and gives the company significant visibility over the medium to longer term. John Wood, Group CEO at Harland Wolff, joins us live. Once again, welcome John.
Good evening, Donald. Great to be with you again.
Hi, thank you very much indeed for thinking of us, John. It's great to have you back.
Fantastic, thank you.
Okay.
And I'll just crack on, Donald. And,
you just crack on, John.
Go through a few slides, and good evening, ladies and gentlemen, and good to be here. As Donald said, I've got a few slides to take you through, then happy to take any questions anyone may have. So as we go through Harland & Wolff, for those of you that have not met us before, AIM-listed organisation, a board of 5. We've got our chairman, Malcolm Grote. Then we've got 2 other NEDs. We've got Katia, who's ex-Shell, banking, investment banking, and it's got a lot of experience in the renewables and energy sector. And we've got Sir Jonathan Band, who's also an NED with Carnival Corp, ex-First Sea Lord, so got a lot of naval experience in shipbuilding in his background also. On the board is also Arun Rahman, our CFO, and myself. So a fairly compact board, which it really gives us that ability to make decisions quickly and get through where we need to get to in the fast-paced environment that we're working in. As you'll see from the slide that's up in front of you at the moment, we've got the PLC is the main group holdings. Then we've got Harland & Wolff operations. Then that splits down into the different shipyards that we've got, which is Belfast, Appledore, Arnish and Methil. Then off to the side of that, we've got Island McGee Energy, which is our gas storage project across the Northern Ireland and Island McGee. And we've also got Island McGee Energy Hub there on the side of that. And that's really incubating new technology and potentially future development areas within that project. So if you look at our history, for those of you that don't know the business, we started off with only the gas storage contract called Infrastrata. We moved from Infrastrata through to Harland & Wolff on the acquisition of Belfast in 2019. Prior to that, I was involved and undertook the FEED for the gas storage project. And I think we moved on from there fairly swiftly on the back of government policy and acquired the Appledore shipyard in 2020, and then moved through into 2021 and acquiring the assets in Methil and Arnish. And since then, it's really been a consolidation process, really getting our assets up to speed, converting pipeline into contracts, and now delivering on the same contracts. One of the things that we've done recently is we've had a bit of a reorganisation of the business, which is fairly normal for businesses upscaling and getting the rate of growth that we're looking to get, where we've switched the organisation into a really matrix organisation, where we've got the operational divisions of the business and the functional leaders also. So we're really, every decision in the business is getting 2 levels of input into it, really improving our corporate governance and making sure the decision making that we undertake is to the right level that we need to be, and making sure all the key elements are covered. A couple of key things on this slide, you'll notice reporting straight into myself as the Programme Director for Fleet Solid Support. Given that is such a large programme, we've decided to take that straight in to the leadership team. And the other subtle change you'll notice is that we've actually split the Belfast yard into 2 yards, one dealing with ship repair and conversion and one dealing with the new build and fabrication, given that they're really 2 substantially different models in Belfast based on 2 different sites. It made a lot of sense for us to do that. So if you look at our business, it's the same strategy as we set out with 3 years ago. As I said earlier, we're 3 years into the 5-year plan. Our markets that we're into is defence, commercial maritime, energy, which really focuses on oil and gas, cruise and ferry, and renewables. And I think it's worth just spending a moment to talk through each of those markets. I think if you look at where we are with the defence space, we've obviously gone out and won the M55 project down in Appledore, which is proceeding very well. Milestones being achieved every month, progress being achieved every month, and the vessel is on schedule for redelivery. As part of that deal, we also acquired the ex-HMS Athelstan, which we've got 3 potential uses for. At the moment, the main reason for buying that vessel was to acquire the spare parts for obsolescence reasons for the corn conversion. Once we get to the end of that, it may be another navy that looks to put that vessel back to sea. It may be a training platform, or it may be a survey vessel. So that's one to look out for in the future. And I think Appledore's had a good run of other projects that we'll come to. You look across in Belfast and Appledore, looking at the Fleet Solid Support Programme. The programme's continuing to move at pace. All the milestones to date have been met on time. The procurement phase is well underway. The planning, design, work package building, again, is all underway. And some of the other works that were undertaken in all the yards is to really provide that fundamental baseline for other projects. If you look in the commercial market, one of the programmes that we've been heavily involved in is building some barges. That's really to acquire those skills of working the panel lines and actually working the fabrication process, really honing in on that cost reduction in our production lines, making sure we're efficient, making sure that we're actually getting the productivity and the man hours per tonne that we need. The work instructions and everything like that is coming through, so that when we do start on the larger Fleet Solid Support Programme, all that work's been done in the background, and we've tweaked our production system to make sure that we're cooking on gas when we get going. Energy, again, energy market, oil and gas, everybody thought was past it and had gone. We've seen an unprecedented level of new inquiries for oil and gas programmes and projects coming up. And I guess that's the sudden realisation that for the amount of time it will take to get the renewable market up to where it needs to be, there still needs to be that ongoing oil and gas sector. So we do expect some growth in that area. And again, cruise market, we're seeing an exodus of new builds. There's not a lot of new builds going on there. So what we're seeing is a lot of cruise, major refurnishments, revitalisation programmes, and we think it will sort of stay like that for the next decade before you start seeing any new programmes coming back into play. So again, all to play for there. When you look at the renewables market, again, we projected 2024 that would come into play. Again, we're seeing that really firming up now in 2024, being a great place to be. Even now, we're involved in numerous bids across different operators, and again, we're fairly comfortable with that market. So I think, there's all to play for, and the strategy's completely played out as we expected it would in the early days. When you look at the services that we offer, from the technical services, clearly that area of the business is getting a boost with the work that's going on FSS. The refit repair work, again, it is continuing to build. When you move through into the fabrication, again, there's a really good run rate going through the yards, and the production rates are really encouraging. And I think when we introduce the new panel line into Belfast, the difference that will make is phenomenal. I think we're talking 800 tonnes of panels produced per week with 13 men, opposed to just short of 100 men. So I think there's a significant benefit in the long run as that plays through. We then look at the repairs and maintenance side of the business. Again, constant churn of work coming through, which we expect to continue. We're seeing contract values increase. We're seeing repeat customers. And again, it's all about getting that level of business through. The area that we're really looking to focus in on, and I'll talk more about this in a couple of slides' time, is that next level, that next generation into in-service support, and looking at building the work that we undertake outside the shipyards to really get closer to the customers, give them an end-to-end service, and build revenue outside the yard. And then finally, the conversion aspects. And again, we're still waiting to land our first major conversion outside the defence arena. And we're also in the loop for various projects in that ilk at the moment. So we're hopeful something might come out in that space in the near future. And then finally, decommissioning. And I think decommissioning is something we've not played that much into. We've sort of sat back at the moment because there's lots of more interest and opportunities. But again, 5 markets, 6 services really de-risks the business. So again, when you look at our assets, conveniently located places around the coastline in the UK, ideal for renewable programs, ideal for defence, ideal for commercial. So we're in a really good spot. And again, some of the largest dry docks in Europe, 2 of the biggest dry docks in the UK, it really puts us in a great position in bringing back shipbuilding and sovereign fabrication back into the UK. So if you look at the model we're operating on today, it's a proven business model. We've proven we can win the work. We've proven we can get the yards up and running. 6 sectors, reducing the profile, and significant opportunities are out there when you look at the pipeline of over 5 billion of opportunities in that unweighted position. World-class assets, as I mentioned, and we're building the platform and building the business on the back of guaranteed and assured delivery, which is a really comfortable place to be. And I think every job that we turn out of the yard, it's another tick in the box, and more customers come back. And I think the level of repeat business we've got is testament to where we are today. But let's be realistic in the whole space of where we are. We're still in year 3 out of year 5. We always knew results last year would be the tough period before we started seeing the uptick. Unfortunately, we missed the number that we were looking to get for revenue by the end of last year, which affected our year-end numbers, which was really unfortunate, but it was out with our hands with some supply chain issues, and it was just a matter of timing. But look, we're very confident we'll make our numbers this year. We know where the revenue's coming from, and we pretty much now know where the revenue's coming from for the following year. So we're in a much more stronger, stable position. And I think there's some really positives that come out of the numbers last year, whilst the overall bottom line number was disappointing. It's that piece around the cost of operations. And when you look at getting the revenue up, we're still managing to see those synergies in the operating costs across the different companies. So we still see there's lots of savings to be made there. We see vertical integration opportunities as we move forward. And you know what? The large area for growth is in the support services. So when you look at the split per market of where we think we are, and we look at the weighted and unweighted pipeline, you'll see the majority of this year's work is in that defence space. But then by the time we get to 2024, you're really seeing that renewables market start to kick in. And when we talk about renewables, it's not just renewables as in structures, it's also renewables as in vessels. And when you look at the local content regulations up in Scotland and from our methyl site, that there's a lot to be optimistic about for SOVs and that type of programme up in Scotland, as well as the fabrication of structures. And I think you look at that, it's one of our biggest sites, so it's got huge potential. And I think you look at the sites, we've seen it in Belfast, we've seen it in Appledore. By the time we get the sites up and running, by the time we get the new management systems and processes in, it takes a bit of time. Now we're seeing Belfast and Appledore really start to crack on. We expect to see that in Belfast. And I think the interesting thing with building barges in both methyl and in Belfast, it's great to see the competitive nature between the yards and see the competitive effort to be the most productive. So the focus for the next 18 months, my final slide, is really to focus on our HSQE to make sure we continue the downward trend with our numbers. Really a big push to convert the pipeline into projects and convert the backlog into revenue. We've got a backlog at the moment of over 900 million. It's really focusing on that and getting that well over $1 billion by the end of the year. The new debt deal that I'm sure is at the topic on everybody's lips. Look, as we operate on a month-by-month basis, we're not in any desperate hurry for cash. We're taking our time. We're making sure the debt deal that we get is the right deal for the business. We want to get the best deal. We're not forced. We're not under pressure. So we'll get that over the line when the time's right, when the deal's right. So we're quite happy to sit back. Obviously, there's lots of government departments involved in that. And we unfortunately don't control them, and they don't quite work at the same speed as we do. But look, we're fairly relaxed, and we will get that over the line, and it will be a good deal when it comes. But again, it's all about delivery and continuing to hit those milestones as we move forward, and continuing to take costs out of the business where we possibly can as we go. And again, it's about those productivity improvement rates in all the yards. And look, investing in new plant and machinery. I think one of the exercises we did was looked at how much money we were wasting on fixing old plant and equipment to try and keep it going. And I think that we've identified a lot of key areas where we can actually just replace the kit and be pounds in the long run. So I think that's ongoing. So again, when you look at what we're actually going to do and focus on, it's really in-service support. It's focusing on our Scottish strategy because we think there's a huge potential up there. You know, the column on the left is really business as normal. The column on the right is really things that we're focusing on to tweak and change a little bit. Renewed focus on renewable, on cruise and ferry, and establishing a small network of services offices to really get local talent into those offices rather than, and it's people that can work remote from the shipyards rather than paying for them to travel, pay for accommodation and things like that. And it's building up that local base in customers' backyards so that we're building and we're embedded with the community, and really thinking Aberdeen is one of the areas that we will be focused on. And I think it's, you know, continue to really build that Harland and Wolff brand globally and lead the industry in projects and development to make sure that we're well positioned for the future. And you know what, if we get all that right, undoubtedly we'll see some shareholder value increased. And I think it's one of the things we're very focused on, and I think it's the biggest goal we've got this year is really to bring some shareholder value to the table, given we're year 3 out of year 5. It's the area that we really want to focus on this year. So, Donald, that completes the slides, and you'll be glad to hear I'm a minute early. You always tell me I never finish early, so hopefully that helps you out a little bit tonight.
It does indeed, John. You're a complete star. So I'm going to throw you a curved ball by asking you about Island McGee, first of all. I've had 3 different people asking about Island McGee. We've got Victor Marshall, a gentleman, Darryl Martin, and one other. And it's basically, if you could give us an update on the Island McGee judicial review, please.
Well, look, Island McGee still remains a key project in the heart of the company. and we're still very, very committed to it, and we want to see that project built out. Obviously, we went through the judicial review. I spent a week personally sat in the judicial review, listening to the arguments on both sides, really so I could get my head around where we were with the project. And I think, look, I'm still optimistic that we'll get it over the line. If we don't get it over the line, there's a few things that we've already started working on that may be an area that we may be asked to improve on. So we've started working on them, and we started on January, February on one of them. It's really to make sure we don't have to wait another year before we go back again if there is any downside. But look, we're still fairly optimistic for a positive outcome. When do we think that will be? September is what we're led to believe at the moment. Again, unfortunately, a bit like government, we can't control the court's timetable, but we believe we'll get an indication in September. We don't believe we'll get any advance notice, maybe 12 hours maximum before it's released publicly. So everybody will know as soon as we know, really.
Okay, let me ask you about your recent annual report and the post-tax loss position, please, John.
Well, look, I think, as I've mentioned earlier, we're 3 years into that 5-year plan. Did we always expect a loss? Yes. Did we expect the loss to be as big as what it was? No. I think that was because we had revenue that was deferred from 1 year into the next year. And I think, look, we've seen substantial infrastructure building. We've seen the capability, the capacity building, and we've been investing really heavily in fleet solid support to build that and building the pipeline of multi-million-pound programs. So I think, look, yes, we have had a loss, a larger loss than we'd like. But look, the foundations that have been set now are fantastic for the coming years. And, I think it's those lower sales than what we'd preferred. But look, we are where we are, as they say, and it's all about how you bounce out of that. And I think some of the investments that we've made have been very strategic investments to actually position ourselves for the future. And I think winning the fleet solid support contract, while it's old news now, that really sets the company up for the future, because what it does is it underpins the baseline. Once the baseline's underpinned, the costs are covered, then it gives us that opportunity to sort of add contract and layer of contract and layer of contract above that. So it really goes as we are. And I think I did mention earlier, we've seen some positive signs of operating costs starting to fall now as the volume increases. So again, that's good. And look, everything's on track, really as to where we want it to be from an operational point of view. And look, I think we're beginning to move to the position we were. I think if you look at the plan, which I actually do occasionally go back to the original plan and review it to see where we were actually looking for a backlog at this stage of 600 million, but we've now got above 900. So look, I think there's positives to take out of the bad result. But look, we're very optimistic that we will hit the numbers this year. And, we think there's lots of additional work and contracts that will head our way, given that the negotiating positions we're at on several deals.
Great. That's a great summary for 2023. Let's look ahead to new contract wins. Have they been what you would have hoped for? And what's to come? Contract wins to come.
Well, look, I think the year started off very well. I think we're really pleased with the way things have gone. It's really, the last 12 months, it's really been about consolidating our position, really getting ready for that next phase of growth. And I think it's about converting the pipeline into backlog, then converting the backlog into revenue. So look, I think we're in a comfortable position of where we are. Again, we've hit our milestones on the contracts that we've got in place. And look, I think it's really about driving and deliver these new contracts. I mean, we're down to the last 2 and the last 3 on numerous programs. It'll just be a case of what hits first when it hits. So I think if you look at where we are, we think we're probably slightly ahead of where we expected to be by the third quarter this year with what we know already. And look, I think we continue to refresh the team and get the right people in for the right roles. So I think we're in a strong place,
Great. Okay. Lots of people have asked about the funding position, including Trevor Draper. So you called it the debt deal. What's the latest position on funding?
Well, look, I think when you look at funding, Donald, it's fairly straightforward. We're in a position where we've got a deal on the table today that we could take. We're not about just taking the first deal. Unfortunately, we did commit to a date when we would get the deal done by. But when you see an opportunity for a better deal, then, hey, we're looking to hang on to get that better deal. And I think when you look at the level of debt that is in the business and you look at the cost of that debt, it's really all about making sure that that debt is coming in at the right price. And I think when you look at the deal that we're trying to get to, I think we really need to focus on that and make sure we come in lower. And I think, you're talking tens of millions of difference between deals here. So I think it's worth that little bit extra time. And if it means me getting a bit of flack in the meantime, you know me, Donald, I'm happy to take that bit of flack as long as we get the deal that's right for the business and right for the shareholders.
You have a thick skin, John. Okay, David Wynn asks, are we winning sufficient contracts in the wind energy sector? I think he's looking forward to 2024 when you're putting a big reliance on renewables. Is that coming through at the moment? Do you see that beginning to happen?
Well, I think when you look at renewables, I think the reason we're not 100% in renewables and we've got 5 markets is you want to spread the risk. I think everybody's been relying on renewables for the last 15, 20 years. And it's ramping up a lot slower than everybody would bank on. I mean, when we put the strategy together, if we'd gone by what we were being told at that point in time, we would have probably said you would have seen the ramp up 23. We didn't. We delayed it because we thought it would be close at the end of 24. And that's exactly what we're seeing. And I think it's not just about the renewables, it's about all the different parts and components that make up the renewables. And I think, as you can see by the projections, we are seeing renewables being a large chunk of the business, but that's not just in heavy fabrication. That could be in vessels, it could be in CTVs, it could be in maintenance and in service support. So there's a big chunk towards that renewable sector. And look, it's really encouraging. And I think, when you see the bipartisan support renewables has got, depending on governments of the day, we don't see any of our markets changing. We see it's still been a fairly buoyant place to be. Okay.
An interesting question from Jamie Broomfield-Payne, who asks, why did the Board of Directors decide to ramp up recruitment for the FSS contract now when it actually just starts in 2025? Now, I think you've already half answered that, but it is an interesting perspective on how to run a business. What are your thoughts?
No, look, I think if we didn't ramp up to 2025, we wouldn't have won the contract. I think it's as simple as that. I think, you need to ramp up the project to win the project. You have to ramp up the project to prove you can deliver the project with some certain degree of certainty. And I think when you look at the percentage of the business that we've got, there's less than 5% of the business at the moment actually working on FSS. All the other employees we've got are working on revenue generating projects, and even FSS itself is a revenue generating project at this moment in time. So I think we've got the infrastructure upgrade that we're working on. We've also got the work pack preparation. We've got all the design, nesting, design, detailed drawings undertaken. And then there's training of staff on the numerous other projects that's going through. Then over time they'll transition into FSS. And I think, when you want to win large projects, you have to invest to win them. They don't just turn up on your doorstep. And I think it's making sure that the staff are capable and they're working as productively as we possibly can. And I think, look, that's key to all of the yards and making sure the continuation of employment, so that as we go forward, all the people in the yards are constantly busy, no matter whether it's defence, oil and gas, renewables, so that there's always work for them. And I think you don't then get hit with every time you get a new project and training people up, then hire them and fire them again. It's all about that continuation, because that's where you get your productivity.
Okay. Jamie also asks, why have Harland Wolff only manufactured 3 out of 11 Corrie barges 8 months into 2023?
Well, Jamie's in a positive mood tonight.
I know, he's very jolly, isn't he?
Look, likewise, really, I mean, when you look at the barges, you're not actually going to build 100% of one barge, put it out, then make 100% of the next barge.
It's not how it works, no?
You're actually building a whole load of components that are all the same, then another load of components the same, and then starting your assembly and putting your assembly together. It's all about improving productivity, reducing costs. And I think one of the other things we've run through with this is actually getting our working schedule sorted out so that we can actually run the asset 24 hours a day, 7 days a week. So we've been using the barges to trial 24-hour working in the yard to see what that looks like. So it's all about getting the maximum production and sweating the assets as we go forward. So I think, look, it's just a production methodology to actually get the number of barges out when we want. And I think, you know, the first one or two always take longer because of the first one or two. Then by the time you get to the back end, you've got numerous barges under various parts of production, so that they start coming together a lot quicker, you know.
Okay, we're running out of time, sadly. It's been a fantastic night. Michael Vidal asks, when will you get back to giving consistent quarterly trading updates? That's a good one.
Well, I actually missed Michael today because he wasn't at the AGM. He's always at the AGM. He wasn't there today, so I thought he might appear someplace.
He's asking questions live instead.
Absolutely. So look, we've got no intention of going back to quarterly trading updates in the short term. Half yearly is where we'll stick up.
Okay, sorry, Michael, that's a firm no. Okay, Glenn Jones is keen to understand what the position is with Sea Rose. It shows Harland Wolff down to the last 3 on the website for the Isles of Scilly Ferries, which is a 3-ship replacement contract, jointly worth over 150 million. Where are you with that one? Do you have any inside information that you can give us on that one? Perhaps I phrased that badly.
I think you phrased that very badly, Donald. Look, I think, yes, we're tendering, we're involved in a live tendering operation for all those projects at this time. And that's about all I can say at the moment, I'm afraid.
Okay, fantastic. Okay, John, you've been a complete star. 3 minutes over. It's been an excellent evening. You've got, I've got to say, John, you've got a lot of information out in a short period of time.
Perfect. Thanks, Donald. And look, it's always a pleasure to see you, and I'm sure I'll be back to see you again soon.
That was a fantastic update for new investors, and I have to say for old investors. If you're a long-term holder of Harland Wolff, you must have learned a heck of a lot from that. So thank you, John. And next up, it's lithium explorer Bradda Head Lithium. And usually Bradda Head are exploring for lithium in the United States as hard rock, clays and brines, 3 different types of lithium deposit. The company remains well funded with a strong cash balance of 5.4 million as at 31st of March 2023, and has an extensive drill program planned to start shortly at its San Domingo pegmatite district in Arizona that the board believes will generate material catalysts for the company. The company is listed in Canada, London and the US, and has a current market cap of £15 million. Here to explain the strategy in detail is CEO Charlie FitzRoy.
Yes, sorry. Great. Thanks for the intro, Donald. Great to be here.
Good to see you. Would you like to take us through your presentation, Charlie?
Yes, we'll do. Well, it's great to be here and, as you said, speaking to new investors and also existing shareholders. Bradda Head, as you said, is a UK, it's a US and a Canadian listed explorer developer with projects in Arizona and Nevada. There's some forward-looking statements here I just want to bring everyone's attention to. The company owns all its assets outright, 100%. So we've got our brine projects up in Nevada, and we also have our clay projects down in Arizona and pegmatite projects in Arizona too. Right now, the company is very much focused on its clay project Basin and its pegmatite district San Domingo. This is where really the company sees the most growth and potential for shareholders over the next 6 to 12 months. We have brine projects up in Nevada, which are currently, we are on hold with those currently just while we conserve our cash and focus really on our clay and our pegmatite projects. And I'll go through a bit more later. So the company is phenomenally well located within the US. We are near infrastructure. We're near existing mines. Both the projects, San Domingo and Basin, are located roughly 7 miles off the highway. We've got 100% renewable energy nearby. Everything is there to really develop these projects for the long term and build sustainable, low carbon footprint projects in the US. And as I said before, both Basin and San Domingo are either adjacent to existing mines like Basin. We've got Freeport's Baghdad copper mine, which is just east of our Basin project. which has been there for 100 years, still operating. And then we have San Domingo. We have 6 or 7 or 8 historic lithium projects on the San Domingo license area. So both areas, not greenfield sites. And then from an ESG perspective, we very much engaging with the local communities, stakeholders, and tribes in the area to make sure we're building relationships for the long term. And again, Bradda Head has that split geological risk between clays, pegmatites, and brines. So we have a better risk profile compared to a lot of lithium guys out there. Shareholders, we've got a very supportive shareholder base. Our board of management, skin in the game, own about 20% of the company. And then we have some very strong shareholders alongside of that. Zenith Minerals founded the assets back with Jim Mellon, Anthony Bailey, and Jason McDonald back in 2016. And then we have LRC, Lithium Royalty Corporation, who own a royalty on our Basin project and Wickiup project. Their subsidiaries, Zenith Minerals, who are associated with Waratah Capital, and Lithium Equities own about 12%. And then we have Nigel Ray at 5.2%. And then below that, we've got 3% holders. So very strong supportive shareholding base there. So these are some of the characters involved with the project. You'll see there the chairman's Ian Stalker. Ian's very well known in the mining industry, and he spent 30 years himself in Africa, built 12 mines, very experienced. I'm a geologist. After studying geology at uni, I spent 5 years in the army before working in equity research, asset management, M&A, all in the mining space, and also corporate development at a large Chinese miner before I joined Bradda Head. Jim Mellon's our largest shareholder. You see him on the board too. And then Joe Wilkins is our COO based out in Arizona, who's Arizona born and bred and phenomenal asset for the team driving the projects out there. And then we have a very strong technical and advisory board. We've got Yatendra Sharma and Don Haynes, who advise on our lithium side of things. They've both been in the lithium industry for 20, 30, 40 years between them. And then we've got ESG, Adam Hawkins, who's our ESG professional. So a really strong team. I understand how to grow small companies and return value to shareholders. So this is the projects we're really focusing on, our Basin project and our San Domingo pegmatite district. Both are not far from Phoenix. San Domingo is about out the road from Phoenix, and then Basin's another 45 minutes up the road from that. And we operate out of a small town called Wickenburg, where we can keep our team lean and just operate both projects out of one location. You'll see on the side there, we have a very low discovery cost. It means it costs us $11 to go in the ground to prove up a ton of lithium carbonate equivalent resources at our Basin project. And right now, we're actually drilling at our Basin project. We put out a news release out this morning saying we're going to have significant resource expansion later this year. And I'll run through that a bit later when we get to the Basin page. So very exciting times for the company. From a sort of lithium macro overview, we've had 2 lithium waves. And this year, we've seen a massive drop in the lithium price, and it has now recovered. And it seems to have stabilized around $40,000 a ton in China. So we're seeing that new stabilization price much higher than previous prices. And there will be a third lithium wave, and it's just picking that right moment. Bradda Head right now is at a very attractive share price, very good price entry for anyone coming into the stock. So please look at that. Bradda Head obviously we are developing projects in the US for the US market. And that enables us to be able to reduce our carbon footprint compared to lithium coming in from abroad. Most lithium is mined in South America or Australia and then sent on to China to be processed and then sent on to the US. So we are going to bypass all of that route by developing these projects in the US for the US market, and we'll understand the energy mix going into it so we can reduce the carbon footprint content even further. And this will become much more important in years to come when we will likely see a carbon content premium for low carbon content lithium carbonate. And that's really what Bradda Head is pushing towards. So that is the rundown of the rough overview of the company, the lithium market, and now we're going into the projects. This is really where we have such excitement for the year ahead. This is our San Domingo pegmatite district. This is our 23 square kilometer district in Arizona with old historic lithium mines on it, and that really governed where we drilled on our first drill program, which we finished earlier this year, and we're soon to start a second drill program this quarter, which will build upon what we've learned from that first drill program and all the work we've done since then. We've got 23 square kilometers, and we're seeing a 9-kilometer strike for our lithium mineralization, which is very exciting. You'll see on the bottom side of the screen there, our best intercept from that first drill program, which is 32 meters, 1.6% Li2O. Why is that important? Well, it's shallow. It's just top 25 meters of the surface, so easy to get to. From a comparison of assets around the world, a good resource grade is between 1 to 1.4%. And For example, lots of the mines in Australia where the majorities was pegmatites are, their cutoff grade is 0.5%. So that grade profile is very good. And it's very exciting for this first drill program. In that first drill program, we did 7,000 meters and we hit mineralization in about 60% of those holes. That's a phenomenal first result. And to take it into context, that first drill program is only covering about 1% of our 23 square kilometers. So really, really good first program, and we built upon that since then. So we did lots of follow-up work. We did soil geochemistry, which you'll see on the screen now, which enabled us to look at lithium, cesium, rubidium ratios. We use those ratios because lithium is very mobile at surface, while cesium, rubidium, present in pegmatites are not. And that enables us to highlight hotspots. So after that, we got on the ground and looked on the ground for spodumene. And the black spots you'll see are areas there where we found spodumene which weren't previously. This map actually has got many more. We're going to update very shortly. So this is showing a 9-kilometer strike of spodumene, which is obviously what we're focusing on this project. And it shows we're the perfect distance from the host granite, which means we've got a very sweet spot of spodumene-bearing pegmatite along a 9-kilometer trend, which is a huge distance. The first drill program enabled us to identify areas for a follow-up and also exciting areas for where we can find potentially for resource delineation, because the goal of this next program is to delineate a resource. That's what we're really going for. You'll see on the left-hand side of the screen was phase 1 up in the north of our claims, and then phase 2 on the right-hand side in the south of our claims. You also see there at the bottom left of the screen, let me just get the pen ready. You'll see our North Morning Star project down there. Those holes are in green because we've got drill data for those holes, but we haven't done that data. That was from the 40s and 50s where the projects were mined for spodumene. We don't have the assays for that, but we know there's exciting amounts of spodumene bearing pegmatite. So that is obviously a high priority target for our next program. As you can see, the identified trend from our previous phase 2 program. So this is our Morning Star prospect. You'll see on the map there, it's got spodumene bearing pegmatite open at depth. You'll see it open at depth here. And this is an area just in the southwest of our claims, and then we go up to the far northeast where we have that really intersection. So we can see the whole claim block has got mineralization in it, and we're looking forward to getting drilling here because once we start drilling here, we will hit spodumene bearing pegmatites, and we know the grade profile is good because we've done channel sampling at the surface here. We've also consulted our geophysical data we did back in 21 and our structural mapping which we did recently, and we believe there are pegmatites at subsurface here, so we could have a larger strike than we think, and that's why this next program is vital for us, because it's going to really, we are pushing towards resource delineation. That's the goal here. You'll see on this map here our priority targets. All the yellow areas are where we've identified areas of priority targets through either the geophysics, structural mapping, and also the soil sampling. And the red areas you'll notice are where we've drilled previously. So this next program is going to be much more extensive, and we know a lot more about the area now. So this is really where we see a lot of value for the company, because pegmatite mining is lower capital cost, easier to get in production. Everything about it is easier compared to brines or clay, which are slightly more complicated, especially from a processing side of things. So this is really where we see the most value for the company. And we'll be starting drilling there very shortly in our second program in the space of 12 months. So after that, we move on to our clays. So we have our Wiki-Up project, which is just here on the map. And then we have our basin project just here. And our basin project is where we put out a news release this morning showing our next 5 assays, which is going to lead us to a significant resource expansion in this half of the year. And we are now working with SRK to get that next mineral resource estimate proven up. As you can see on the map here, this will be our 4th mineral resource since 2018, and also the 3rd one since early 2022. So we've been very busy at basin. This program now is focused on the Basin East extension area you'll see here, and also into Basin North. Previous drilling was only focused on Basin East. So you'll see this outline here, this resource. So this new area covered will be 4% of our claim block of the Basin project. Sorry, not 4%, sorry. 4 square kilometers of the Basin project with a 17 square kilometer project in total. So we expect a significant resource expansion. And the reason why I was so excited from the announcement this morning is because if you look at the cross-section below and also the map above, where we drilled previously at Basin East, which is largely the area here, all our upper clay unit, which is our higher grade unit, is about 34 meters on average. And now we're seeing that more than double across the creek. So all the area at Basin East extension, we're seeing double the thickness of the upper clay unit, which is very exciting for us for resource expansion, also the grade profile increasing. So we're looking forward to getting this resource out. And most importantly, I suppose, is we have a royalty in place with LRC for our clay projects. And once we increase our resources to 1 million tons, we get another $2.5 million coming in. And that's very important, especially in the markets right now. It's tough to raise funds. So this really helps us and extends our runway of cash, which is very vital for us as a company. So very exciting times ahead at San Domingo. We're starting our second program very shortly. And Basin, we are coming towards the end of this program here, where we'll see significant resource expansion later in the year. And I want to talk about our brines as well, because whilst we're not doing any work on our brines this year, they are very prospective. We are actually in discussions with various groups about JV potential there to really get the value out of the brines without us putting too much cash into them. So these are two projects up in Nevada where we've identified the presence of brine-bearing reservoirs, and also our Wilson project on the left here, potentially a clay one. You'll see this magnetotelluric scan here. You've got a clay profile, and below we have a brine, and then Eureka, we have a brine potential there. So both of these projects, we've identified lithium at surface, and we are in the process, as I said, discussing potential for JV options of these two projects to develop them, whilst we focus on our near-term projects where we see most value for shareholders, which is our San Domingo pegmatite district and our Basin project. So as you see here, we are in the process of drilling at Basin. We've got a resource estimate out in end of Q3, early Q4 time. And then San Domingo drilling is about to kick off, and the main goal of that is to delineate a resource. And at the same time, we are permitting for our plan of operations, our Basin West and West extension, which is just west of Basin East extension, for a drill program early next year. So a lot going on at all these projects. Exciting times ahead for us as a company. So in summary, we obviously have, as I said, very strong ESG potentials too. Our ESG team are very much focused on helping us engage with our local stakeholders and tribes in the area. We have a community website which enables us to talk to our stakeholders and give them, and then give us feedback on how we're doing. So we're very focused on the long-term relationship here. So in short summary, US-based lithium explorer developer, funded for our 23 programs, new resource on the way for our clay projects, San Domingo pegmatite district drilling about to kick off, very experienced management, supportive shareholders, ESG focus, a lot of news flow on the way, and we're in the most phenomenal place in the US, top 2 states in the US for mining. So there you go. Any questions?
Fantastic update, Charlie, and very concise. You get today's gold star.
Well, thank you.
Very good. Let's talk the RNS. You put an RNS out this morning. Let's just quickly run through that to make sure that everyone's up to speed with it.
Yes, so the RNS this morning was a really positive RNS for us. The market has responded very well, which is great to hear, because right now RNSs get mixed reviews. And so what this morning we put out there is the next set of assay results. And what we're showing is that we've now drilled around the exterior of our Basin East extension claim block, which is just next to Basin East and next to Basin West and North. And it's showing that we have clay throughout that area. So we've got mineralized clay, and we've got the complete sequence. We have the upper clay unit and the lower clay unit. And that's important because the upper clay unit is much higher grade, and it's double the size of Basin East extension. So Basin East. So this is going to lead us to a larger resource expansion this year. And as I said, we are targeting that 1 million ton expansion to get the royalty payment. So really, really positive results for us today. And now with SRK, we are pushing ahead to get that resource done as soon as we can.
And you basically add the resource from East and the resource from West, and that all counts towards the royalty.
Yeah, any resource at the clays counts towards royalty, because at our Basin project, we've got 17 square kilometres. At our Wiki-Up project, about 29 square kilometres. And our Basin project, we've got an exploration target by SRK of between 1 and 6 million tonnes of LC, so lithium carbonate equivalent. So we've got a huge potential there. It is potentially a project builder a company builder in itself, Basin. And this end of this next program, we would have drilled on about 4 square kilometres of it, which we're already going to see some significant resource expansion.
Okay, and let's take an overview of the entire business. You've got 3 prospective lithium targets in Arizona and Nevada. You've told us already that Nevada is brine, and you're not going to do that this year, yes?
Correct.
So what are your targets? What are your priorities in 2023 and beyond? What's the strategy?
Well, for us, the key thing is getting a significant resource in place at Basin, which means we can start our PEA. And once we get a PEA in place, a technical study, means we can then apply for funding from the US government. And that is really what we're focusing on, because we want to make sure we are limiting dilution for shareholders. And that is a good way of getting us funding going forward. And then San Domingo, again, we're about to kick off drilling there. It's our second drill program in the space of 12 months. And we are focused on delineating a resource there so we can move towards technical study again to enable us to get funding for the US government. Because whilst the clay project we are very excited about, and we're going to get some significant resource growth this year, the pegmatite project will be easier for us to get into production, lower capital cost for a plant. We'll be producing a concentrate, so a 6% spodumene concentrate, and we'll be selling on to a end producer. Like, for example, Tesla have just set up a spodumene conversion, they're building a spodumene conversion facility in Texas. So that would be an ideal place for us to sell our concentrate to, or over to Piedmont's facility in Carolina. So a lot of places in the US are now setting up these facilities, and that's really why we're excited about San Domingo, because we are in the right place for these markets, and we're well located in the US, in the southwest US, where there is a huge amount of battery factories popping up. LG Chem have just announced last year they're putting up a $5.5 billion battery facility, as Tesla are doing in Texas. Tesla already have it in Nevada. There's a lot of going on in the southwest of the US, and especially in northern Mexico as well. So we're so well located for all those markets.
So San Domingo is hard rock drilling, it's pegmatite. Why does San Domingo excite you so much?
Well, pegmatite mining has been very proven during the times of lithium price rises to be able to, the miners can really scale up and turn on the taps. It is a straightforward mining process. It is not a chemistry set. Some brine projects can be delayed, like we've seen Lake Resources recently had a 6-year delay because of its DLE process. With pegmatite mining, it's very well understood. There's no complex chemistry to it, and it's very straightforward. So if we can delineate a sizable resource there, we will have a massive growth in value for us as a company. We've got a huge area, 23 square kilometers, and it's been mined for spodumene already back in the 40s and 50s. So we have spodumene there. We are now just drilling. We've got 1,500 pegmatites at surface, for example. We did a mapping program of SRK, got so many outcrops, and now we're just trying to understand the structure. And that's really what the second program is going towards. We've understood much more from the first program. We've done soil geochemistry, geophysics, structural mapping. And this next program is much more targeted. The first program was focused around old mine workings to understand, to try and really get some good interceptions. And we got some. Now we know a lot more, and we are really excited about getting going for this next program, because if you look at valuations of lithium companies, you've got pegmatite miners up here, and then you've got clays and brines lower down. So that's why I really got so excited about the pegmatites.
Okay, you're going to push on with the pegmatites. Is permitting going to be a slow process, do you think? Or is it possible that a mine supplying strategically important lithium might be fast-tracked for the US market?
In the last 12 months, we have seen definitely a softening in permitting. We've got a very good relationship with our permitting officials in Arizona. We've done everything in the right way, and we actually are seen as a gold standard company in the state from how we permit. So we managed to get our permits on time, and that's obviously in the US, that is one of your main hurdles, is permitting. So we've got good relationships, we've got a good team in place, and also, most importantly, we very much have set up our relationship in the local area with our local communities and tribes and stakeholders. So they are very supportive of us too, because we are trying to be good stewards of the ground out there. So permitting, whilst it can take long in the US, we've got a very good relationship. So we perceive it to be only a matter of time.
Okay. My last question for you. What do you think the news flow is going to look like over the next 6 months? If investors are looking to invest in the stock, it's always good to have good solid news flow. So I suppose that's a double question, really. What's the news flow going to be like? And what's your investment summary? What would your investment case be if people want to invest in you anew, or if you want to renew people's watch list interest, all those good things?
Well, we've got a lot of news flow coming from our basin project, where we're going to have our last set of assays come through. And then that will all push into the resource expansion. Right now, we've got SRK working on that. And that resource expansion, we are pushing as soon as we can get it. It's going to be towards the end of this quarter, maybe early Q4, but hopefully we'll get it sooner than that, because that really triggers that next royalty payment. And that's what this next resource expansion is all about. And then alongside of that, with Basin, we'll be having the announcement we get the plan of operations permitted at Basin West and West Extension, and that will lead into drilling next year, which will lead into much more significant resource expansion target. So there's a lot going on at Basin from a resource expansion point of view, and once we get significant resource, we can kick off our PEA, because that really lead to a much bigger NPV on any technical study if we get a sizable resource before we start that PEA. And that's what the technical study will mean for us alongside of the funding. So that's Basin. And then San Domingo, again, we'll be kicking off drilling this quarter and getting results out to the market. We've got priority targets, which we are going to focus on. And the key aim of that is resource delineation. So we'll be having announcements throughout this program, updating the market on what we're doing, how our drilling's going. And the key thing is to push towards a resource in that point. But that's really the focus for us right now as a company, is conserving our cash and focusing on Basin and San Domingo to make sure we focus on the assets which have potential for most returns for shareholders.
Okay, that's very clear, Charlie. I'm going to do a bad thing to you now. A whole rush of questions have just come through. The electronic system being what it is, I've now got a backlog of 4 different questions for you. Are you happy to take those?
Yep.
Yeah, good man. Okay, Josh Cole asks, he says, Morningstar seems very promising. How many metres do you plan to put into that pegmatite alone?
Well, the program's going to be success driven. But Morningstar, as Josh rightly points out, is a high priority target because we have historical drilling there and we know we're going to hit spodumene. So we are roughly guiding the program, a third up in the north, a third in the center, and a third in the Morningstar area. That's really roughly how we'll go. So that's all I can say right now, but it might be more, might be less, depends what we find, but we're pretty excited about that area. And we see that as a real high priority target for resource potential.
Okay, Elijah John, great name. Okay, you get today's Best Name award, Elijah. Are you looking into DFC funding, says Elijah?
We are looking at all US funding options, but for us as a company, we can't get funding from the US government until we get technical studies in place, and that's really the focus for us, and that's the key thing for us as a company. But we are trying to. There is potential for us to get funding on some of the options with the clay route, because some of the clay processing technology can be seen as novel. So we can get funding potentially from other sources like Department of Defense before technical studies, but that still can't kick off till next year because they've had all their funding allocations for this year. But we are very much, I was in Washington in January this year, myself and the CEO, we did a tour of all the policymakers in Washington to chat to them on the ground. So we've got a very good relationship and links with these guys out there. And that is something which we are focused on as soon as we get these technical studies sorted.
Technical studies. What do you mean by technical studies? And likewise, if you could, it's a new world that you can go to the government and say, I'm drilling for lithium, can you give me money? So perhaps if you could explain that a little bit more for our investors.
Got it. So with mining projects, we need technical studies, and technical studies advance in confidence and knowledge and certainty towards a final technical study. So we'll be doing an early stage technical study called a pre-economic assessment, which will be the first stage of programs, either like a scoping study, you'd call it. And this will be just an initial study put in place to show that actually this project has legs and economics. And then you move on to a feasibility study or a definitive, and then there's definitive feasibility study, or how some people call it, a bankable feasibility study, which enables you to get debt and equity for going to project financing. And that's really what we need to do, because the US government has a lot of people, a lot of projects, a lot of lithium guys trying to get funding, and they need to have a filter. So they said, fine, we only look at projects with a technical study for funding options, which makes sense. I understand that because there's a lot of companies out there, and not all mining projects go the full distance. So that's how they are filtering who's viable for a funding opportunity or not. The US government's got $369 billion put aside for this via the Inflation Reduction Act. So we're very excited to get going on that once we get our first technical study in place.
And Elijah, I think this flows very naturally on. When do you realistically see a PFS to be completed for your project? So, how long will it take you to get to preliminary feasibility study stage? A year or two?
Well, yeah, for the basin, that's the basin. Obviously, whilst we see San Domingo as the most exciting prospect, the clays is quite refreshing because it's a sedimentary deposit. We can have drill spacing much wider. We can predict where it's going to be, so it's much easier for us to form up a large resource. The key thing with that basin project is just the processing work, which we are doing in the background, because clay has a slightly, everyone's trying to work on the processing side of things. And we'll do a PEA, kick it off towards the end of the year. That would take 6 months to do. And then we'd feed information from that, do further drilling, and a PFS we could do the following year. So it's quite a short-term distance for PFS, but it depends really on how things develop with the project. But we see potential for large resource expansion with the pegmatites. we need that first resource in place before we can start a PEA. But again, with the pegmatites, it's a much more understood route to end production, so things can move much more quickly.
Charlie, that's us for tonight. I think you've been absolutely fantastic. We've learned so much about your project and you've been a fantastic exponent of it. Thank you. Barton Gold is an ASX-listed Australian gold exploration company with a total attributable of 1.3 million ounces of gold, JORC mineral resource endowment, which is a hefty endowment so far, and they're looking to build on it. They have a pipeline of advanced exploration projects and brownfield mines, and 100% ownership of the only regional gold mill in the central Gawler Craton of South Australia. So that's in the middle of South Australia. In June, Barton completed a $3.5 million Australian dollar placing to institutional and sophisticated investors with a further 1 million, or it's 1 million plus, it's 1.2 million, I think, share purchase plan just completed. So that went very well. The business currently has 14.75 million Australian dollars, Aussie dollars worth of cash and gold in concentrates. MD and CEO Alex Scanlon joins us live from Adelaide, where I do believe it's 3 o'clock in the morning. Welcome, Alex.
Good morning, Donald. How are you?
This is how weary are you feeling?
Yeah, I'm fine. I've been up for a little bit and I've had plenty of coffee, so
You're feeling all right. Well, very grateful to have you here all the way live from Adelaide in the middle of the night. So thank you very much indeed, Alex. Would you want to take us through your presentation? That would be great if you could.
Sure. Can everybody see our presentation up on screen there?
We can indeed.
Great. Okay. So just, before we jump into the presentation itself, just in terms of the cover shot there, one thing to highlight, that's not a stock photo. That's actually a photograph of a high-grade open pit that we have at our Tarkwa project. So I'll come back to that and explain why that's relevant to sort of our stage development plan as we go through the presentation. But just starting on kind of our overview slide here on our presentation, for those of you who are not familiar with the Barton Gold story, our story is at once pretty simple and then very multifaceted. So we are a South Australian focused gold developer. We are very interested in the state of South Australia because it actually contains 25% of Australia's known gold mineral resources, but really speaks for only about 2% of annual production. And this is really a product of an historical legacy of investment and development, which has been biased toward copper and uranium development in the state. And a lot of this has taken place in the very center of the Gawler Craton, where we are. So this is a very widely known mineral district. And it just so happens that just to the west of the iron oxide copper gold belt, the district that BHP has just essentially fully consolidated by acquiring Oz Minerals. So it now owns Olympic Dam, Carrapateena, and Prominent Hill. On the other side of the highway, quite literally, there is an historic gold district called the Central Gawler Gold Province. This is a province with about a 130-year history of high-grade gold production. And in this province, we have very carefully assembled essentially a ground package which contains every significant historical producing and exploration gold asset. So we have, in short, built up a ground position of just over 5,000 square kilometers. And in the past few years, we have now built up a JORC resources base of about 1.3 million ounces. And we also own the only gold mill in the region. So this is a mill that was producing in 2018 from some of the assets that we own. It's on care and maintenance, and it's something that we can reanimate for relatively low cost. So that's kind of the package in summary. What are we doing? That is it. Why are we doing it? Well, we are looking at the much larger and multi-million ounce resource potential of the Central Gawler Craton. We do know that there is significant gold endowment. Our Tunkillia project is the largest undeveloped gold-only resource in South Australia. And so we are not just rushing these assets back into operation using our mill. Noting, however, that mill does provide us very strong strategic leverage to not only our own assets, but other regional assets as we move forward in the stage development plan. So in summary for us, our corporate focus is very, very clear. We aren't chasing rare earths in a different jurisdiction or nickel in Africa. It's gold in South Australia. Our time, our people, and our money is very focused. We believe that is a pathway to success. We have a very strong platform, and as you mentioned, we are extremely well capitalized. We have the perhaps unique circumstance of actually being a concentrates producer simply as a byproduct of some of the work that we do on our infrastructure. So as we look at our capital structure before we get into the projects, we have a very simple, clean capital structure. We have about 195 million shares on issue. Our market capitalization is around $50 million Australian, or once you factor all of our cash on hand of just over $10 million, we have an enterprise value of around $40 million Australian, or say 30 million US, or 25 million in terms of pounds sterling. And as we mentioned, we also do actually hold about $3.4 million worth of gold in concentrates on hand. So from an enterprise value basis, Barton is certainly a sort of very compelling value proposition for what you get in terms of this infrastructure platform, plus the resources, plus our ability to actually generate capital. And we have started to perform quite well over the past year in particular, I think, as we've really broken away from the market trends, as I think the market has started to recognize these things. And one of the reasons too, I think that I think one of the reasons for our strong outperformance and our sort of, let's say, creative footwork is that we do have a very strong principal interest in the outcomes here. So we have very strong board and management alignment with shareholders. So the board and management represent about 1/4 interest in this company. And together with our institutional and corporate partners, board and management and institutional and corporate speak for about 40% of the register. So it's a very strong register sort of in terms of its shape. We have some very, very strong specialized institutional funds, including several who have recently joined us, and a very strong board and management alignment with the balance of the shareholding. And when we think about the capital structure of the company, it's important to think also about human capital. So looking at our personnel, we have built a team that really reflects not only our forward ambitions, but brings a lot of capability in terms of diverse experience and skill sets to our board. So when you look at our senior team, and I'm just talking about the board and our sort of senior management team, we have a team that has over 200 years of experience exploring for permitting, financing, developing, and operating major mineral resource assets, with a particularly strong pedigree both in South Australia and gold. So those sharp-eyed readers who are looking closely at the screen might notice that 3 of our senior team are formerly of Normandy Mining and Newmont Mining. So Normandy Mining, the news today in the gold space is that Newcrest is being purchased by Newmont. 20 years ago, the big news was that Normandy Mining was being purchased by Newmont to enter Australia. Normandy was Australia's largest gold producer through the end of the 1900s, the late 1990s, and going into early 2000s. My chairman was the former CFO of Normandy and Newmont, and we also have our project managers and exploration team drawn from that team. We also have expertise developing and running uranium assets for the subsidiary of a U.S. defense contractor in South Australia, which is about as complicated as it can get from a regulatory standpoint. And we even have a mill specialist on our board. So really comprehensive skill sets. And that's what's really setting us up and setting us up for and driving our pathway towards operations. So when we think about those operations now and our corporate ambition, if we sort of step back up to the corporate level, we've got our platform, we've got our team, and where are we going? Our ambition as a company is to take these assets, again, build them up to a multi-million ounce operating resource base, and to become South Australia's largest independent gold producer in about 5 years' time. And importantly, what that means is, to break that down, is what we're looking to do is to be producing around 150,000 ounces per annum of gold. And importantly, we're looking to do that in a series of stages. We're not looking to just make one big jump from, say, 0 ounces of production to 150,000 ounces of production. We have the ability to leverage our existing infrastructure and existing mining leases to enter into stage 1 production on a much lower cost, much lower risk basis, so that our expansion, if you will, or the increase to a much larger amount of production is not just one big almighty jump from 0 to 150. It's an expansion of operations, and we can do it off the back of cash flows derived of our first assets and operations. So what we're looking at doing here to achieve this is really looking at bulk open pitable mineralization at Tunkilia, and we're looking at shallow high-grade mineralization at Tarcoola. And so those two assets really are one project that will operate together and in tandem in the long run. They're only 70 kilometers apart. We have about 3,000 square kilometers of ground. We have well over 100 kilometers of major structures mapped there. And on less than 2% of those structures, we already have 1.2 million ounces. So we are going for big, we are going for efficient, and we are going for the ability to leverage our existing infrastructure into operations and then expansion into stage 2, big bulk operations. And the reason we are interested in big bulk open pit operations for our stage 2 expansion is that it works better than anything everywhere all the time. In really simple terms, mining is little more than the volumetric efficiencies of blasting and lifting and moving and processing material. So we are looking for big bulk open pit for that stage 2. And when we are looking at that, we actually look to other sort of analogs in the market for, why are we doing this and how are we going to do it? Why do we want to pursue that strategy? The strategy for Tunkilia as that stage 2 expansion, it was really based upon our analysis of open pit versus underground operations in Australia. And we actually looked to a group called Capricorn Metals, which is listed on the ASX as well. They are a very well-known gold developer. They purchased a project known as Karlawinda back in 2015. And that Karlawinda project looked a lot like, or I should say our Tunkilia project, when we were looking at it, looked a lot like the early days of Karlawinda. So Karlawinda, when it was acquired, was about a 650,000 ounce asset. Capricorn grew it to about 900,000 ounces, and then 1.1 and 1.3 and 1.5 million ounces. And they've continued to grow it. It's now about a 2.3 million ounce resource. But importantly, it's a 0.7 gram per ton resource, which is something that in Australia people would traditionally think of as quite low grade because we're used to high grade underground mining. However, Capricorn has built this into a big bulk open pit, and it is now actually one of Australia's lowest cost gold producers. So on a quarterly basis, it is either the lowest cost or the second lowest cost gold producer, and therefore the highest margin gold producer in all of Australia. And so we are building our Tunkilia project strategy and the pathway forward on that to emulate this success and emulate it. We have been doing, when we acquired Tunkilia, it was about a 550,000 ounce asset. We grew it to 965,000 ounces in 2020, and we have just recently grown it to 1.15 million ounces, and we intend to grow it again by the end of the year. So again, following a simple but proven model for high volume, high profit operations. And certainly if we can achieve even a fraction of what Capricorn have achieved, our shareholders should be in for strong rewards. So looking at, the totality of, what we've done in the past 2 years, we have been listed for 2 years now. During this time, we've brought in a lot of new technology. We've done an incredible amount of work on the ground to build momentum towards this sort of ultimate stage 2 plan. We've done about 31,000 meters of drilling. We're about to kick off further major drilling programs. During the past 2 years, we have already found 4 new gold zones, which have more than doubled our known gold mineralized strike around our projects. The South Australian government is a very strong supporter of ours, so they've given us nearly $1 million in grants to co-fund our projects. And importantly, as we touched upon on sort of our opening, we have so the unique circumstances of being a cash generative explorer developer. So we are probably not best thought of as an explorer developer, but really an advanced asset manager who happens to be operating drill rigs. Since we IPO'd, we've generated over $5.2 million in net additional free cash that's non-dilutive. So net of the cost of running sort of various special projects, we've generated this $5.2 million in cash. This has strongly subsidized the work that we're doing and also protected shareholders quite considerably from any further dilution, from funding that we might have required. And the big news for us recently has been actually that following the news of a rather significant and very cost-efficient resources upgrade at Tunkillia, we actually had a number of institutional investors join our register at a very attractive price with very low dilution for Barton shareholders. So the strategy, both in terms of the exploration and the corporate side, is really paying off. And I think the awareness of what we're doing on an international platform or an international basis is really growing. So let's step into the assets now. I'll take you guys through the projects. And we'll start with Tunkillia. So again, starting with that kind of 5-year middle distance target. The key takeaway for Tunkillia, if we think about the region, is that we are at this very interesting triple point of geology where you have sort of 3 complexes coming together. And where these complexes are coming together kind of at the seams, we have this very, very large shear, sort of systems of shears. This is a broad kilometers wide set of shears. And where we're really focused is the Jarl Brinda shear zone on one of our main tenements there. We've got about 30 kilometers of strike. And in the very northwest of that tenement is where we're sort of focused in the first instance. So if we zoom in on that area, what we're looking at here is an area that's about 5 by 5 kilometers, and it hosts our 223 deposit. So the 223 deposit is the cornerstone deposit of our Tunkillia project. It's about 2 kilometers long. We have grown that twice in our ownership, again, from about 550,000 ounces to 965, now 1.15 million ounces. And we have also now identified 3 new gold zones in the near vicinity of that project. So we are starting to prove or demonstrate to ourselves that this shear zone is actually mineralized on both sides of that 30-kilometer long shear zone. And we also are finding repeats of that style of mineralization. So it's getting quite exciting. When we step into that 223 deposit, what you can see on the screen here is a long section demonstrating how we have just systematically extended and smoothed the base of that resource shell in 2 iterative stages of resource growth in 2020 and 2023. And this latest resource growth for us, which we published at the end of April, has been quite rewarding. It was actually not only a significant resource upgrade, but it was also very cost efficient. So we were able to add about 189,000 ounces to this resource at a cost of only about $12 Australian per ounce on an all-in basis. So, dollars per ounce is often quoted just on a drilling basis. This is drilling and assaying and surveying and labor logistics, everything. So that's really bottom of the global cost curve for new ounce addition. We are following this up again for further growth. But importantly, the way that we're modeling this asset, again, with a mind to expansion and high confidence expansion, is that we're not really modeling this as a promotional resource, if you will, right? So not to cast aspersions, but much of the market so the stage of exploration development is focused upon the promotion of an asset. We really have a production mentality. So we've actually imposed very, very strict modeling in this resource. We've modeled it the way that you might think about modeling a production resource. We've actually imposed very strict grade capping, which has reduced our estimated grades. And we have also actually allowed into the model an internal dilution. And what I mean by that is we have built a model to assume that we mine straight through waste that's in the middle of the model. Because what is happening as we're modeling this now, and what we're discussing really for the first time with this asset publicly, is that the geometry of this geology, if you will, is starting to look very interesting. And there's sort of 3 key characteristics that kind of jump off the page when we look at the shape and nature of this mineralization. The first is that the deposit has a bias towards shallow, in simple terms. So about 80% of the resource and ounces are within 200 meters of surface. The second is that there is actually a 300-meter long high-grade zone in the center of the deposit. So what you're looking at on the screen right now, you have a 3D image of the deposit on the left, and on the right-hand side, that is a cross-section through the center of that deposit. And what you can see there is that you have this very broad mineralization. So these are sort of 80 to 100 meters of mining width. So if you can imagine tipping a football field end to end, that sits inside of the mining width of our project. So this is very big, very bulk, very efficient style of operations. And this is why I was saying we allow internal dilution. If inside of a 40 or 60 or 80 or 100 meter mining width, you come to 2 or 3 meters of waste, you're using big bulk equipment. You don't even slow down. You go straight through it, and it all goes through the mill. And the reason is the cost per unit of mining, or per cubic meter of dirt removed, is dramatically lower for large scale equipment than it is for these small scale equipment that you would use to selectively remove that style of waste. So big bulk open pit. And then what you can see in that center as well is that it is actually a high grade central zone. So we would be developing down to start this operation on mineralization that has mining blocks that are up to 5 to 10 grams per ton. And then the third interesting really feature there is as we open that main central pit to go into our stage 2 expansion, and you start to produce that higher grade mineralization, if you look along the top of this deposit, and we have this shaded in sort of a light opaque blue on the 3-dimensional image, there is there's a 2 kilometer long supergene zone. And what this means is there's an enriched zone that sits along the whole top of the deposit. It's between 1 to 200 meters wide. It's between 10 and 20 meters thick, and it contains about 225,000 ounces of gold near surface. So as you develop that central pit, and then as you start opening it to the north and to the south to get into big bulk operations, it actually is being paid for. The work to open that up is actually being paid for by that shallow supergene blanket. So it's very, very exciting for us. And then again, if we step back and think about the big picture, zooming back out, looking at the regional district, we think the 223 deposit will continue to grow, but everything that we've been looking at is really just in the northwest corner of that shear. We have another 25 kilometers of untested shear there. The same models that we have built that have correctly predicted new mineralized zones previously predict new ones down that shear. So we are going to be aggressively following that up, both in terms of growing that resource and regional exploration later this year. In fact, we'll be drilling quite shortly. And again, big picture strategy. If you had these big bulk operations, which we hope will be very, very cost efficient and profitable, you would really love to have some additional high grade ore nearby, because if you can add additional high grade ore to supplement this, it's really just cream on top of cream in terms of profitability. And this is where we look to our Tunkillia project. So, our Tarcoola project, beg pardon. So again, for frame of reference, we're just 70 kilometers north. So this is really a satellite to this stage 2 operation. But Tarcoola is actually the home not only of South Australian gold, but South Australian high-grade gold. It was the site of South Australia's gold rush in the late 1800s. It produced high-grade gold through the early 1900s. And then fast forward 100 years, a mining lease was put in place, and high-grade gold was produced during 2017 and 2018. So that was that open pit you saw on the cover of the presentation. And that mineralization was being trucked to our mill at a grade of about 3.8 gram per ton on average during 2018. So we have the ability to sort of build up mineralization here, where we've got this sort of hundreds of historical high-grade mineral occurrences. We can use this mineralization as we build it up to supplement and blend in high grade to the bigger picture 150,000 ounce per annum target, if we think about that stage 2. But critically, as we build this mineralization up and we add high-grade resources to our overall picture, these become resources that we can bring forward and put through our mill. And that allows us to advance a stage 1 operation, utilizing a fully built mill that we can cheaply recommission. In fact, it was recently, we recently had it valued for insurance purposes, and with an estimate that it would cost about $140 million to actually build and replace this mill if we had to. So it's a very cheap drawbridge to cross, if you will. And it means we're, $140 million in 2 to 3 years of permitting ahead of anybody else who might look to develop a project. And that mill has proven logistics here. So we can start a stage 1 operation. We can generate, 40 to 60,000 ounces per annum production, generate $40 to $60 million in free cash flow, and then use that to expand into stage 2. So why are we excited about the potential of that pit and its potential repeats of it? If you look at the pit, it's a very shallow pit. The long section you see on your screen now shows it was actually developed only to about 70 meters depth in its deepest point. That pit produced somewhere around 30 to 40,000 ounces during a short period of time. And interestingly, the prior owners were a little bit cash constrained, so they weren't actually able to invest in depth and strike extensions of mineralization. We've extended the mineralization to 200 meters depth below the current pit floor, but we've also found this entirely new gold zone, which we've called Perseverance West, and that sits just behind the southern pit wall. You can see the type of grades that we're intersecting there. So that's literally not a walk-up drill target, but a walk-up mine straight through the pit wall and into that mineralization target. And we can send that to our mill because we know that mineralization processes at about 94% recoveries. But as we step out again, think about the big picture. The big picture really is the bigger picture. So looking at the left side of your screen now, this is an image of the mining lease at Tarcoola. And what this shows us here is basically the Perseverance pit. And we've identified 3 targets that we think actually structurally are likely or could potentially host repeats of that high-grade mineralization. And this is based on geophysics and drilling and mapping and historical high-grade operations, similar to the one that led to that pit being dug out. So on that fully permitted mining lease, possible that we could, one, put some fairly significant new resources on that open pit. All that drilling currently is not in JORC resource, and we're looking to actually convert that into JORC resource this year. But if we can find a few repeats of this, we could have our entire stage 1 operational supply of ore for several years just on this fully permitted mining lease. We can start mining this tomorrow if we like. But then again, as we step out just a little bit further, the image on your right shows a seismic picture of the 15 kilometers covering that mining lease and to the west. And what this shows in very simple terms is we have gone and built a new regional structural model. And we've labeled there in a very thick line the Perseverance shear. Now this shear is the shear that created that high grade open pit on our mining lease. So it's nice to know where that gold comes from. You can see that shear passes through the Tarcoola Formation. That's the source of mineralization in the region, in the central Gawler Craton there. And that plumbs directly into one of those red traced bodies there. And those are granite intrusive bodies. They're part of what is known as the Hiltaba intrusive suite. And these are the same engines of growth that sit just to the east underneath Olympic Dam, which is the world's biggest everything deposit. In fact, one of the world's biggest gold deposits too, is even though they don't mine it. So that's very, very interesting to know where that comes from. But what is equally interesting to us is as you look across the 15-kilometer long span to the west, we've identified a dozen or more parallel and cross-cutting structures that are perfectly analogous to that structure. So they pass through the same mineralizing formation and they plumb into the exact same intrusive body. Importantly, where they come to surface, they're pointing like arrows to targets that we had already identified as very attractive exploration targets based on surface geochemistry and analyses, one of which was actually drilled by Anglo Gold in 1997, and that's that target labeled Warburton. Now, Anglo Gold drilled there based upon a geochemical anomaly. So they drilled blind. They didn't have any structural knowledge, but they drilled 16 meters at 3.5 grams per ton from surface. Now, today, you would be very excited about that and you'd follow that up quite aggressively. But in September of 1997, when they got those assays, the US dollar gold price was $300 and falling. And they did not actually have the structural context to understand why and how they had hit that. So we have actually backfilled that story. And so between the mining lease, where we think we may have a cluster of these high-grade open pits, and the short distance to the west on our exploration license, we think we may actually have a cluster of clusters. And what we are doing right now to actually kick off a very aggressive drilling campaign is we have just completed line clearing for a new shallow seismic program to sharpen the resolution of the subsurface imagery and to basically sharpen up our targeting. So we're going to be collecting new seismic imaging starting in a couple weeks' time. And then we're going to aggressively follow this up with drilling across all of these potential high-grade targets throughout the balance of 2023.
I'm so sorry, Alex. You're rather overshooting time. I do apologise. Is it possible to wrap up, please?
Absolutely. I'll wrap up right on this one here.
Sorry.
No worries. So what we're going to be doing for the balance of the year is continuing to grow that Tunkillia resource, drilling across our Tarcoola targets. We'll be looking for new resource upgrades both at Tarcoola and Tunkillia, and of course continuing to sell more gold as well. So apologies for the overrun.
Not at all, Alex. It was absolutely fantastic. Absolutely fantastic. Now, I'm going to be naughty and just ask you a very broad and general question. That was so analytical. What is your background?
So my background is structured finance and economics.
Because that's a very unusual presentation you've just given us. That was so precise and so detailed. You were a surgeon of the mining world.
Well, I don't know about that. Look, what I would emphasize above all is we've really focused on team. My job is to think about strategy, capital, and sort of management. And we have an extraordinary exploration team that have really put together quite a compelling proposition.
Well, it was indeed a compelling proposition. That was a very interesting presentation indeed. The second point I would make, my ad hoc comment, would be that you've just grade is king normally, but you've proved that Capricorn and you think very otherwise. Grade is not king.
Correct. In fact, several of the most profitable operations in Australia today, and certainly many of the most profitable operations globally, are actually 1 gram per ton ore bodies. But Australia just happens to be known for deep, high-grade underground gold mining. The issue there, as we see it, is deep underground gold mining is essentially the act of sucking golf balls through a garden hose. It's very hard to get efficiencies of scale, and a lot can go wrong. And hundreds of millions of dollars can go wrong between surface and 2 kilometers underground. So we favor simpler operations because you can achieve, you can take efficiencies of scale. You can ramp up production that way.
Now, you've told that story very compellingly, Alex. Well done. You've been reopening an old mining district in South Australia, breathing new life into it since 2020. What advantages does a brownfield site bring?
As you pointed out, it's an existing district. This is a huge mining district where BHP is operating. We have several iron ore operators. This is a district with a lot of knowledge, a lot of experience, very, very rich mineralization. And because we have fully permitted mining leases, it is a much lower cost, lower risk, and shorter timeline for our ability to sort of push the green button, if you will, and start operations. Of course, using a mill too, we've got about $100 million advantage over somebody else who needs to actually develop a mill that isn't there.
Now, my question was going to be, what makes you believe you've got a pathway to 150,000 ounces gold mine in and around the Gawler Craton? But I'll be perfectly honest, I've never heard anyone actually answer that question better. You've already answered it completely. How did you come across this as a concept? Where did the thinking come from?
Yeah, so back in 2016, we were doing essentially, if you will, global analysis on potential long-term macro trends. So my job was basically spotting the trend and identifying where we wanted to position a family office that I was running. We decided on gold. We narrowly focused in on Australia in terms of jurisdiction, operating cost base being in Australian dollars. And naturally, you want to look for assets where you have an infrastructure advantage, which is either the access to it or the ownership of it. Infrastructure is really the defining characteristic of successful operations. So it's probably not a unique or a surprising proposition. What is unique is the ownership of the infrastructure in that region, and it does sort of make us masters of our own destiny, and the ability to cheaply start, say 50,000 ounces per annum of operation, and then just fund our own growth as opposed to sort of being hostage to constrained funding, which is really the challenge that stops many great projects, is the need to spend $250 million or $1 billion to get into operations. It's an almighty jump that sometimes can't be achieved.
Do you see yourself mainly being self-funded?
Look, we have demonstrated a pretty strong track record of generating internal funding. We will sell the gold concentrates or process them that we've been generating, and we are actually looking at starting a potential additional processing or production of concentrates from our existing stockpiles, which we do have. So we think we're in a pretty strong proposition to actually make the transition into stage one operations without much, if any, additional equity capital raising. And of course, we have my background is banking and finance. We have very strong relationships across not only equity providers, but standard credit providers, but also non-standard credit providers, so trading houses and all sorts of structured financiers. So I think we're in a good position to make that step in a responsible fashion. But we'll always be quite careful about treasury because cash and cash flow are king.
Okay. Will you be pushing hard to increase resource in the 4 new gold zones which you delineated in one of your slides there?
Correct. Yeah. So the rest of 2023 will be focused on one, increasing and essentially crystallizing more scale on that stage 2 platform, and then also crystallizing some of the early, let's say, stage 1 resources that we want to put through our existing mill. So we want to come to the end of this year. We've got about 1.3 million ounces of gold now. We want to come to the end of 2023 with somewhere closer to about 1.5 million ounces or more. And then during 2024, of course, we'll continue to grow these things, but we'll be starting to turn our focus forward. We talk about 2023 being a transformative year. We'll be turning our focus forward to start looking at in what order and how do we start turning these things back on.
When do you expect production, and even in its earliest stages? You mentioned that it was going to be phased in a very clever way. When might the kernel of production start?
Yeah, look, it's always a hazardous question. But if we have a 5-year target,
and it's the middle of the night as well.
Let's just say we have a 5-year target for our 150,000 ounce plan. Every 50 or 60,000 ounces that we add at Tarcoola, which is higher grade, 2 gram plus near surface, that brings forward production that we can start by a year, because that will produce 40 to 60,000 ounces per annum through our existing mill. So what we're looking to do is to find 2 or 3 years of, let's say, operational runway in terms of that mineralization and start stage 1 operations. Now that could mean 2025, but we also have, if we think in these terms, we also have the potential for smaller scale stage 0.5 operations, just consistently producing more high grade concentrates from our stockpiles, which we have been doing on an increasing basis since we IPO'd.
So when might the care and maintenance element stop?
So I think to turn on that mill, that's when we would be looking at engaging full scale operations. So you might look at that in 2025, but we could conceivably actually use just the crushing and grinding circuit of that mill to actually crush, grind, and produce a concentrate of some of our existing stockpiles. So there is a potential to even though that asset is a very simple reanimation, just to ease that back into operation. And be using it to actually using the front end of the mill to produce gold concentrates during 2024.
Okay, which neatly takes us to the one-off concentrates. Tell us about the concentrates, the ore, the tailings, all the possibilities that the asset that you purchased actually holds.
Yeah, so I mean, in really simple terms, when you acquire an historical operation with a mill, you often acquire much more kind of scattered around on the ground. And so, we've been collecting concentrates at our mill by doing, first we did a gold room clean out last year, and we sold about 1.5 million Australian dollars worth of gold from that. In December, we actually disassembled the gravity circuit and cleaned that out and collected about 10 tons of gold-bearing concentrates from that. We've been systematically cleaning those and preparing those to a saleable concentrate. And we now have about $3.5 million stockpiled of gold and concentrated, around 5,000 grams per ton from that. So we also then look across the site. We have probably around 300,000 tons of lower grade stockpiles, so stockpiles between 1 to 1.5 gram per ton at our mill site, as well as the Tarcoola site. And we also have some other smaller, potentially higher grade stockpiles. So we're selectively working through those and doing metallurgical analysis to figure out what would be attractive to process to a concentrate, and in what order. So there's a lot of potential in all these stockpiles. And the things like tailings, as you mentioned, you know, this is a high grade historical production site. Production grades, or the head grade going through that mill, were 5 to 10 gram per ton historically. So there are potentially significant gold credits in the tailings facility, but there's also potentially other mineral credits that were not previously economically viable. So we're actually going to go through and test the tailings facilities to see if we don't actually have a 6 million ton deposit of other minerals right there that we can just reprocess.
Alex Scanlon, you're a complete star. On the one hand, we shot over and it went all over the place. On the other hand, what a fantastic education that was. That was a compelling telling of the story. Thank you so much. 3 o'clock in the morning.
Thank you very much for having me.
Well, I can't believe you're that good at 3 o'clock in the morning. I certainly wouldn't be, Alex.
Well, we try to be good every day, but thank you very much for having me, and apologies for running over.
No, not a problem. Alex, that was terrific. Thank you so much. Our final company of the evening, Kavango Resources, is a Southern Africa-focused metals exploration company with exploration interests in Botswana's Kalahari Copper Belt, the Kalahari Suture Zone, and now Matabeleland in southern Zimbabwe. CAV have just signed a 2-year option to acquire Nara, a producing gold exploration project with 45 contiguous gold claims and the potential to host a bulk mineable gold deposit. Well, we've been hearing about bulk mineable gold deposits from the previous company. Kavango announced a potential 6 million equity investment in 2 parts in May. As I understand it, part 1 is completed and Pure Bond Limited now own 26.7% of the company. If stage 2 completes, that will move to 52.5% of the business. Monies raised will fund exploration work, possible acquisitions, and contribute to the company's general working capital. Here is Ben Turney, CEO at Kavango, to explain all.
Sorry, it would help if I unmuted myself. Hi, Donald. Thanks very much for having me.
My pleasure, Ben. Are you nicely unmuted and ready to go?
Yep, we are ready to go. Thanks very much for that previous presentation. It actually segues in perfectly into the opportunity that we believe we have here at Kavango.
It does indeed.
So, moving into Zimbabwe is a big deal for our company. As Donald said at the beginning, we've been known historically for the work that we've done in Botswana. Now, so far, that hasn't led to any success for us in the field, despite significant investment in our projects. The biggest challenge that we have in Botswana is that our projects are all covered by quite deep Kalahari sands. So at surface, there is little to no regional geology to act as guides to help us, hopefully finding mineral deposits. In Zimbabwe, the situation is very, very different, and that's been the primary attraction taking us into what is otherwise viewed as a very risky jurisdiction in the world. Now, one of the things about Zimbabwe is it has a reputation for being a country that hosts a large number of small, high-grade mining operations. There are currently 4,000 deposits in Zimbabwe that are being mined. But what that consensus misses is the obvious comparison with Australia. And it's fantastic that the presentation you've just listened to takes us into one of the key points that's attracted us into Zimbabwe from the very beginning. In 1982, as you can see from this chart in front of us, Zimbabwe actually produced more gold than Australia did. The geology in Australia and particularly the prolific goldfields of Australia and Zim is very, very similar. But where Zim went through a lot of difficulties over the last 48 years, both pre and post independence, Australia from the mid-1980s onwards experienced the bulk mining boom. And in very, very simple terms, what happened in Australia is ready to happen in Zimbabwe again. But unlike back in the mid-1980s, we won't be having to reinvent the wheel. We'll be using tried and tested methods and technologies to extract the minerals that we discover. But where Kavango has its edge is with our use of modern technology and the exploration team that we've built up, and what is a genuine first mover advantage in this country. Now, if you look back at the gold production stats, you can see that when the bulk mining boom took off, that led to 30 years of continuous economic growth in Australia, where the country hasn't actually experienced a recession since then, largely as a result of what happened. And the premise is very, very simple. If you imagine gold deposits, the high-grade veins, they can occur in reefs that run parallel to one another. And in very, very simple terms, what happened was that historically, the miners had focused simply on the high-grade reefs. No one had looked at what was in between those reefs. And what we've just heard in the presentation just now is that these days, some of the biggest, most prolific, most profitable mines are those bulk mining opportunities, which have looked at the gold that's contained within what used to be the waste rock between the high-grade veins and is now subsequently being effectively scooped out in these super pits. Now, because of a lot of the troubles that Zimbabwe went through, despite the amazing geological potential of the country, these 22 old greenstone belts, no one has really exploited that in the last 40 years. And it's our belief at Kavango that there is a significant opportunity here, notwithstanding the challenges that we will face in the country. Now, we've been working on the Zimbabwe project one way or another for about the last 18 months. I first went out to Zimbabwe in August last year, and unlike a lot of companies which I see are talking about moving into Zimbabwe, we've put in place a very, very strong foundation for and a plan to execute to take our company into this country. We'll provide a copy of this presentation at the end. This is obviously a bit text heavy, but I wanted to show this slide tonight, Donald, just to give an indication of just quite how much preparation and work we've put into this before announcing these two options that we've picked up on the two projects that we're hoping to acquire, subject to field due diligence. So let's talk about the two projects themselves. Our main area of focus is Matabeleland. Matabeleland is in the southwest of the country, and it has within it a number of the most prolific historic greenstone belts. You can see on this map in front of us the town of Bulawayo. I'm actually going to be moving to Bulawayo as part of this opportunity in January next year to lead our company on the ground. The opportunity down there is so significant, and everything I've seen down there shows me we need strong leadership, strong local leadership on the ground to drive forward our operations and take real advantage of this opportunity. So I'll be relocating there with my partner to take on that role from January 2024. Now, one of the things about Bulawayo, and in particular about Matabeleland, is the infrastructure down there is surprisingly strong. So if you look at any of the charts for Zimbabwe, any of the reported statistics of how the country is performing economically, they don't match up with what you will see on the ground. Where Zimbabwe doesn't have really any sort of effective capital markets, that in itself presents quite a significant opportunity, because notwithstanding the lack of available finance for everything from a small car loan through to project finance for development of a mine, that's really quite significantly constrained the development of Zimbabwe's gold exploration industry. One of the things that really struck me while I was out in Zim was the sound of the stamp mills. Now, stamp mills are 19th century technology that you currently see all over southwestern Zimbabwe, and they're being used to produce the gold. And effectively, they're hydraulically driven hammers that hammer and crush the rocks down into a state so that the gold can then be extracted from that using cyanide leaching. Now, this has been what's driven the Zimbabwean economy. It's very much a cash-driven economy these days. And if you ever do visit the country, you'll notice the number of quite high-end cars that you see on the road, the trucks that people drive, the shops that are full of products that we would all recognize as at prices that we pay in this country as well. All of this is driven by cash. So where a lot of our economy now is completely reliant on debt, if you see somebody driving quite a smart car, you don't know whether or not that person actually owns that car. In Zimbabwe, you know that that person owns the car because there is no available finance to finance it. Now, that's quite a micro view of the potential of the opportunity in the country. But it does really say a lot about the industrious nature of the people down there, how entrepreneurial they are, and how hardworking. Through Hilary Gumbo and through the connections that we've had in Botswana, we've worked with a lot of Zimbabweans. And one of the things that's always struck me about the people I've met from Zimbabwe is how eager they are to get on. It's a very well-educated population. English is the second language. It's the lingua franca of business as well. The people on the ground and the talent that there is available locally, they are so desperate to see their country and their mining sector develop, because what everybody recognizes through this growth point strategy that they have in the country is that mines offer one of the greatest fast-tracked ways of social advancement and economic advancement that is available to a country like this. And because there has been a near total lack back of modern exploration and modern mining in this area over the last 40 years. This is an opportunity that is just really crying out for modern investment, which we believe a company like Kavango, through obviously our status as being listed on the London Stock Exchange and the access to international money markets that we have, we believe that we can bring both our skills and our access to finance into this country and develop some of these projects in a fast-tracked manner. Now, our first project that we took on, as you can see in this picture here, we've got a copy. We can see Peter Winterby, who's one of our directors, with Brett, and to the right is Steve Smith. Now, Steve has been the main inspiration behind this move into Zim. Steve is a former exploration geologist from Anglo American. He rose as far as an exploration geologist could without actually getting onto the corporate ladder. Steve's blood is in exploration, and when he first went to Zimbabwe in 2008, he fell in love with the geology there, and he stayed in Zimbabwe throughout the troubled periods. Anglo pulled out of Zim in 2007, but Steve, when he moved into the country, he saw the potential there. And over the last 15 years, I honestly don't believe there is a person alive on this planet who knows as much about the Matabeleland gold fields as Steve does. So Steve has very much been the inspiration behind this, and Steve is currently helping us develop our operations on the ground as well as sourcing new projects. Now, the first project that we've anonymised, Donald, to keep the details of the people that we're working with private, is the Nara project. It has 4 historic mines on it that between them produced 90,000 ounces of gold in the first half of the 20th century. We believe that this project, with its 4 kilometres of strike across about 48 gold claims, has the potential to host over 500,000 ounces. Now, one of the great things about this project in particular is it's sustained a 35-year stamp milling operation, which essentially has meant there's been continuous production using effectively hand picks to dig the gold out of the ground. And they've really just scraped away at the high grade gold that's available on the surface. So we know that there is a lot of gold there. It has sustained this operation. It's this operation that's led to the dump that is one of the most attractive aspects of this project as well. We believe there's between 150,000 to 250,000 tons of material to process. We don't know what the grade might be at the moment, but we are going to test that with auger drilling in the coming months. And that offers us obviously potential for near-term revenue. But the project itself, the claims are contiguous, but uninterrupted along the strike. So although British investors are used to seeing companies with larger exploration licenses, as we have in Botswana, the whole attraction, or a big part of the attraction for the opportunities in Zimbabwe, is if you think about what the actual size of a mine is, it's obviously much, much smaller than the original exploration licenses. It's our belief that by picking the right areas and securing the right deals, we don't need to build up a large land package. Instead, we're acting much more as a sniper in this space, looking to take out the best opportunities that we can that exhibit the kind of characteristics that we see down at Nara. Now, so far, there are about 2,000 metres of artisanal and small-scale mining workings across the site. Assays, we've done some initial assay grab samples of between 1 and 4.4 grams a tonne. Now, obviously, these are grab samples, so we're not putting that out as an RNS, but these do give a bit of an indication of the potential. And what you can see in this image down to the right is a hand specimen of quartz with disseminated arsenic and gold that's clearly visible. Now, again, this is just a rock that was lying around at surface. This is something that hasn't actually been processed, but it's an indicator of the size and the scale of the opportunity that we have in front of us at this project. Now, one of the other big attractions at Nara, we obviously have the surface potential that we're going to be exploring, looking for that bulk mineable potential deposit. We have the dump that offers us the possibilities of near-term revenue. But we also have quite significant underground workings. We've already sent a mining engineer into the underground workings. He was there 2 weeks ago. So he went just a week after we signed this option to check that the pillars hadn't been ripped out and that the mine, which goes down to about 7 levels, is still intact. We haven't received the final report from him yet, but from what he's seen so far, it does appear that this is safe. And Kavango has recently purchased its own underground rig to enable us to look at underground exploration. So what we're interested in underground is where the historic miners focused on the high-grade quartz veins to mine out. Nobody really looked at the bulk mining potential from underneath. So what we've already seen is significant indications of potential in the wall rock as well. So we're going to look to drill this this out as quickly as we can. That is assuming that we do get the all clear on the underground workings. Now, today we managed to get this out before the presentation. I was very keen that we completed this deal this afternoon. I set a hard deadline of 25th of July. We've also announced the Hillside project. Now, we've got a 6-month option on this project that's just been announced this afternoon. Hillside lies in the same greenstone belt as Nara, and it's a few kilometres away to the northwest. It sits along the same strike, and while it's not quite as big as Nara, it's 400 hectares across 40 claims, which aren't quite contiguous. It's spread across 3 targets in 3 blocks. Because it sits on the same target zone, we're interested in exploring this, because if our plan works out at Nara and we are able to identify that 500,000 ounce resource, we believe the Hillside project alongside that has equal potential for a surface bulk mineable deposit. Now, that's what we're going to be searching for in our exploration, and because of its proximity to Nara, if we do ever get to the point where we mine this and we build out the processing plant, this project has wonderful potential to be a feeder into Nara. Finally, we have the Leopard project. Now, the Leopard project we also announced as part of the same deal today. That's further to the northwest on a separate greenstone belt. It's in an area that's not too far away from Caledonia Mining's Matapa project. It covers 2 historic projects, one we called Site 1 and one that we've called Site 2. Site 1 has got a historic resource on it that was drilled out in the 1970s, so it's not code compliant. It's about 220,000 ounces. So our plan at Site 1 is to go and retest that target. Now, there are some complications around identifying where that target might be, so there's some initial preparation work that we need to do, the drill logs that we have access to. There's a few gaps in the information that we have, but we've developed a really quite impressive looking already 3D underground model. So when we come to mobilize the drill rig here, we've got almost a walk-up target. There's an adit on site as well from some underground workings. You can see Brett and Hillary at their site visit to this project. That is the adit that you can see on the top right-hand side. We'll be doing, again, underground drilling here, as well as sampling along the wall rock sides to see what potential there might have been left from the historic underground mining. Site 2 is very interesting because Site 2 sits on one of what historically was one of Zimbabwe's very large producing mines. It mined down to about 1,000 meters. It was an underground mine at about 0.5 gram a ton. We're not so interested in the underground there. We don't believe that that's safe. We're not looking at the underground opportunity. Instead, what we will be looking for, again, is this bulk mining potential near a surface, testing some of these high-grade veins that have been historically mined. There is artisanal working, again, on this project, as there is at the other 2 projects as well. We've got quite extensive signs of both recent and ongoing artisanal workings. This again gives us quite a clear indication of the gold that is near surface, and it's now up to us to get in there and test the bulk mining opportunity. We've already mobilised a surface rig into Zimbabwe. That's currently being taken into the country alongside our underground rig, and we're hoping to be able to start drilling in Zim in the next couple of months and look forward to providing updates. So, Donald, I was conscious that we didn't have a huge amount of time. Should we move on to the Q&A?
Yeah, no, that would be absolutely fantastic. Now, I'm busy scribbling my questions here because things have changed fairly dramatically. So, Zimbabwe seems to be the home of bulk mining from your perspective. That's the new strategy for Kavango, is it?
We hope so. The biggest challenge in Zim, apart from the obvious sort of around sort of the economic issues in the country, is actually the ownership structure. Now, in Zimbabwe, there are effectively two forms of license for a company like ours. You have what's called an EPO, which is an exclusive prospecting order. That's like an exploration license, similar to what we have in Botswana. The problem is that there are EPOs that have been pegged over pretty much all of the most prospective ground. There are some that might be available. We are looking at some opportunities to pick up some EPOs, but they really are like hen's teeth. However, what you have within those EPOs are what are called gold claims and base metal claims. Base metal claims are much larger than the gold claims. A gold claim is a 10-hectare area that historically would have been pegged out by a miner to come and start up a mining operation. Now, this structure dates back about 80 years. It was when the British were involved in Zimbabwe, and it's carried on through to today. And the reason that it's carried on until today is because obviously what these 10-hectare plots give is the opportunity for local, well, not artisanal, local contract miners to build small local businesses. And that's really what's driven the Zimbabwean economy over the last 10 years. The challenge is that with these claims, is finding enough of these that sit on contiguous blocks to enable exploration. Because obviously for a company like ours, a 10-hectare claim or even a few 10-hectare claims isn't worth so much. What we're looking for is the potential for 500,000 million-ounce deposits that will lend themselves towards bulk mining. Now, the number of projects...
What's your solution then to your problem?
Exactly the projects that we've picked up. So we've identified a pipeline of projects which have got contiguous claims stitched together, a long strike of potential gold deposits that have got security of tenure and have been owned by the same individuals for quite a long period of time. That's very important in Zimbabwe because you want to secure your legal tenure, just in case you do run into some of the issues that can occur down there. But so what we focused on, we've got a series of criteria that we've applied to our search for projects across Matabeleland. These 3 projects that we've now secured, these were our top 3 targets. But underneath that, we've got about another dozen that we're looking at. Now, this is also another reason that we're playing our cards quite close to our chest at this stage, because the first mover advantage for a company like ours down there is very significant. We've got an opportunity here, Donald, to build a mid-tier gold producer.
My slight worry is that the rule of law isn't the firmest of things in Zimbabwe.
Look, we're under no illusions. It's a hard environment to operate in, but strength does matter down there. As long as you do things in the right way, you follow the rules to the letter, and the bureaucracy down there does require a degree of management. Unlike in Botswana, where we run the business remotely, what we are very clear about in terms of our business and our plan in Zim is that we have to be strong on the ground. Hilary obviously is on our board, one of our co-founders. He's from Zimbabwe. He lives in Harare. He knows a lot about the country. Steve Smith is a very close contact of mine. He's introduced us to a lot of people. We've built up already a very strong support network in the country. And once I'm actually down there on the ground and able to run the business from there, while obviously we've got to be alert to some of the issues that we might face, by doing things in the right way, by investing properly, and also investing in our people down there, just as we've done in Botswana. I believe that will be what makes the difference. If we look at Caledonia Mining, they've paid something like 14 consecutive quarters of dividends now. They've been able to build a very successful business. Their current market cap is around about $250 million. They built that over the last 15 years. That was through 3 periods of hyperinflation. So it is definitely possible, but yeah, this is not a jurisdiction for the faint of heart.
No, indeed. But we've had Caledonia Mining on London South East. They're a cracking company, and as you say, perhaps slightly against the odds, but they've absolutely made it work, and then indeed expanded their mining operations. Both in
you say against the odds. I mean, it all comes down to risk reward, and one of the advantages of Zim for a company like ours is the entry price. To pick these projects up, Donald, that we have, even in a slightly safer jurisdiction. I mean, God, in somewhere like Australia, the prices for this would be a multiple many times what we're paying. So on the one hand, yes, you're right, the risk is there, but that is also reflected in the price. And because we're turning up with hard foreign currency, ready to invest into the country, there aren't many people like us who are down there currently doing that. So, we believe that, our position, while we're certainly not going to rest on our laurels, and we're not going to, we are going to remain alert. We do believe there is a significant opportunity. The government's been very keen to promote that Zimbabwe is open for business. Let's put that to the test. Okay.
Now, James Patterson asks about Nara because he didn't know about Hillside or Leopard. But imagine this is exactly the same question for Hillside and for Leopard as well as Nara. Is it an outline investment appraisal for Nara, Hillside, Leopard? And if so, please give it a rough outline. He talks about target resource, capital outlay, time span, exit strategy, and investor returns. So what's your answer to James?
So the detailed response will be in the prospectus that we're about to publish as part of the Pure Bond deal. But in summary, as in the presentation I've just given, that answers quite a few of James's questions. We're targeting 500,000 ounces on each of the project areas. That is our goal. The way that we've structured these deals, Donald, we're actually, because we are a buyer in a buyer's market, we've been able to negotiate very favourable terms. So before we actually have to acquire these projects, we're able to perform field due diligence. And these projects all have walk-up drill targets. So we are going to get into these projects as quickly as we can. We're going to test their potential. If they don't meet our internal criteria for us to make the investment, and at the end of the day, Mother Nature can be very unkind. You know, despite all of the indicators that we see at surface, until we've actually got drill results on these projects that haven't been drilled using modern techniques, then we won't know what is actually there. But if the projects don't stand up, they don't pass muster, we'll simply move on to the next option. As I say, we've got a pipeline of at least a dozen other opportunities that we're currently working on.
And how long do you actually have for your due diligence period? How long does that last?
So on the deal that we've announced today for Leopard and for Hillside, we've got 6 months that begins today. For the Nara project, we've got 2 years.
Okay, but let's briefly look outside of Zimbabwe. What happens to Karakubis and the Kalahari Copper Belt? What happens to your other holdings? Where does the priority lie now for Kavango?
So in Botswana, our priority is absolutely Karakubis. Ever since Dave Catterall has been involved in the company and has really helped set us on the right track, where we had taken a few wrong turns in the past, Dave has now really helped us sort those out. So our focus is very much on Karakubis. We put another update on that today. We've just started we're about to start, the IP surveys. So we're looking for potential areas of mineralization. We're then going to follow up with 2 phases of drilling. The first phase of drilling will be to effectively do some subsurface soil geochemistry to help us tighten up our diamond drill targets. Now, we're going to expect to do that over the course of the next 6 months. So the RC drilling I expect will happen in the next 3 months. The diamond drilling will probably be at the start of next year. In terms of Ditau and the KSZ, we're currently working on our plan for Ditau. Our approach there is going to be to seek a partner to come and take that project on. It's another project that's under quite deep cover. It's a big project with big potential, but it is technically very challenging. And we think that based on our experience in the KSZ, that's probably a meal that's a bit too big for Kavango to swallow at this stage.
So on the KSZ, farm in for Ditau?
Farming, that's the goal. We'll have to see if we're able to secure that.
Okay.
For the KSZ, pretty much the same story. We've obviously just recently had quite a disappointing drill result where we hit graphite, not the metal sulfides that we were hoping for. So it's back to the drawing board for us in the KSZ. Now, there's a lot of the KSZ that we haven't explored. We know that we're using the right technologies and we're following the right approach, but it is extremely high risk exploration. So what we're currently looking at is what we can do to advance that project, if there's anything we can do to advance that project. With our own funds. But again, we are going to continue to see if we can bring a partner into that one. So the KSZ and Ditau, there will be some work that we do, but our primary focuses are on drilling in Karakubis and drilling in Zimbabwe.
Fantastic. Okay, Ben, perhaps I would have asked this first, but you've given me so much interesting news flow that we simply had to explore all that. Where are you with the 6 million Pure Bond fundraise announced in May? Which is a very big question, but there you go, I'm asking it last. Where are you with the 6 million Pure Bond fundraise?
So you correctly said, so the first 1.5 million of that, 1.4 million, sorry, that closed in June at the AGM. The remaining 4.6 million is subject to a whitewash and a shareholder vote. We're currently producing the prospectus and the circular. We hope to release those in the coming weeks. There is quite a lot of work that's had to go into that, and we also felt that we were going to close this project today as well. So we were waiting a little bit. We're a bit behind on preparing the prospectus because obviously today's announcement is quite significant as a new project that's come in. The relationship with Pure Bond is very strong. We spoke to them on the day that the KSZ result came in. Their exact words were to us were they didn't care if the share price fell to half a penny. They're backing Kavango. We've done the deal at a penny. There's been no attempt to renegotiate the terms. They are very firm and strong supporters of us. So we're pushing ahead at 1 pence a share, which is roughly about a 65% premium to where we're trading today.
Okay, and my final question, Pure Bond will own 50% plus of the company. Does that involve a change of ownership, or am I getting the wrong end of the stake?
It's 52%, and that's what we need the whitewash for. So the two of the key thresholds under the takeover code, the 30% rule that everybody knows, but there's also another threshold at 50%, where if you own more than 50% of the company, you're then able to trade freely in that company's stock up to 90%. So between 30 and 50, if you were to change your position, that would require further shareholder permission. But between 50 and 90, because at that point you're able to pass ordinary resolutions. The idea of the takeover code is that you've had shareholder approval, what's called a whitewash. You're then able to trade the stock more freely. So if Pure Bond want to add to their position in the market, they will be able to do so at that point.
So does this count as a friendly takeover by Pure Bond?
I wouldn't say it's a takeover. They've not asked for board seats. We're putting together a relationship agreement with them. They've not indicated any interest in taking over the company. Pure Bond itself, it's the family money of the Consagra family, so the family office of the Consagra family. They've got, I think it's around about 300 million in assets. It could be more than that. I don't know the exact figures. But they've got investments across different sectors. They've got mining investments, healthcare, other business enterprises as well. So they're very busy with their own businesses that they run. They haven't indicated any interest for taking over Kavango. And in terms of their overall net worth and their overall portfolio size, the investment in Kavango is still relatively small, albeit extremely meaningful for a business like ours.
Well, what can I say? Wow. Last but most certainly not least, Ben, thank you so much for your time. That was Ben Turney, CEO at Kavango, with an extraordinary update on Kavango Resources. Thank you so much for your time. That was excellent. Thank you.
Thank you.
And that's it from us after another great investor evening. Thank you very much to all our speakers for joining us live from around the world. And it really was around the world tonight. And to the support teams, the unsung support teams, for getting them all there. And many thanks to all the people behind the scenes who get us here, who always do such a terrific job. That's everybody who has anything to do with this event. Thank you. And as ever, I'd like to give a special thank you to Jeff Burdett and the team at Red Cloud Financial Services. He's working with two companies we had on tonight. He works with Barton Gold, and unknown to me, he also works with Bradda Head Lithium. So thank you very much indeed to Red Cloud Securities. That's it from me. A huge thanks to you all once again for being such a great audience, and we look forward to seeing you again on September the 5th when we host our next IR webinar. Have a good evening, everyone.